Good morning to all traders and welcome to another Market Insights video. Today is Wednesday, the 24th of February, and we're going to have a quick look, as promised yesterday, on metals and energies, gold, silver, oil, and natural gas. Now, yesterday we had Powell's testimony, and today will be, of course, the second day where he is going to testify once again. But if the first day didn't really have much of an impact in the markets, I don't think the second one is going to. Now, Powell reiterated his stance that the Fed will keep supporting the US economy until the maximum employment in the US and also average inflation of 2% are going to be achieved. Now, markets saw little reaction to his comments, which was expected because it was a reiteration, and metals remained upbeat as the chair Fed, of course, stated that interest rate hike is still several years away. Oil also held recent gains above the 60 psychological barrier, despite the API reporting a crude oil stocks inventory, as investors remained focused on the big Texas freeze and the supply disruptions that it's going to have. Easy monetary conditions, as reiterated by the Fed's chair as well, and also, of course, tighter supply in general from the OPEC Plus. Now, the EIA is going to report today as well the inventories for the week. If that is a confirmation of a stock inventory build as well, then that could see WTI trading lower intraday, maybe even not intraday, even longer, like tomorrow and perhaps even Friday, who knows. But whatever the case is, I think that this is likely to be a temporary drop, in my opinion. We're going to analyze why in a minute, but we're going to start with the gold. You who watch, you probably know how long I've been waiting for this double bottom down here, right? I've been waiting for this double bottom for a while, the 1763. Now, I can say with more confidence that this triple zigzag has finished. Confirmed by the MACD, a little bit less by the RSI. This looks like to me we're going to start a very big and nice wave that is going to take us to fresh highs. There is, of course, potential that we're going to break below that level, right? We can even go down to just above the 1668 anywhere, yeah? And still that upside is not going to be invalidated because it's just going to be a motive wave on the upside. Where I will be looking to to validate such move would be, well, first of all, we need to break that trend line, yeah? On the break, we could get a bounce and then move higher. And then second, we'll have to break this trend line, okay? So after that, we'll get a bounce and then continue higher. Then this will be the second validation for this continuation on the upside. Now let's jump on silver. I'll be honest, on silver, I don't see the same. Simply because I still think that this move from down here, all this is not impulsive, okay? It doesn't even look like motive, to be honest, okay? Now that said, I remain adamant on the ABC running flat. I've been waiting for the last few weeks, I would say, here. Yeah, because this would be my only chance, our only chance that wave 4 is, or the end of wave 4 is somewhere truncated. And that would bring us down to 2357 or so, okay? Now, that said, I am looking at this as wave 1. And this as wave 2, W, X, and Y. Now we could get another move up here where wave 2 is going to end and then move lower, okay? Just to keep that in mind. Otherwise, the moment we break below this trend line, yeah, it's very likely that we're going to hit lower down for the wave 3. We're going to get a short 4 and a short 5, in my opinion. Now, of course, and as always, the alternative, in case we continue moving higher and break to fresh highs, well, we could still be in an ABC, W, X, Y, X, and Z here, yeah, where we get wave B over here in the intermediate, because the intermediate wave B for an expanded or a running flat can go up to 38.2 expansion, okay? So we can still go to 33 and still consider this as part of a correction rather than a move on the upside. The other scenario, of course, only when we break 33 is when I will start considering that this was a big mistake for me to count it as is. But to be honest, experience tells me that this is not definitely not looking as an upside move. Okay. Now on WTI, I've had to play around a bit with this, to be honest, because we keep getting new highs. Yeah, we have to bring a new count in mind. If you recall, I was looking at wave 1 here, 2, 3, 4, and 5. Okay, obviously with the extension that on the upside over here in the previous wave 5. Now we've got 1, 2, 3, 4 for 1. Yeah, a multi-structural wave 3 that is not ended yet. Yeah, then the 4, then the 5 for wave 8, because I believe since we're very close to the 161 Fibonacci extension for wave 3, 64.48, we're going to get that there soon for the minor decree. Then we'll see a correction. Then up in 5, which is wave A, at around 70, which is probably going to miss a 70. Then we're going to perhaps drop down in wave B and then continue higher. Medium and long term. Now for the short term, yeah, here's what I'm looking, guys. I'm looking at this as 1, 2. That's 1, 2, 3, 4, and 5 for 3, 4, and 5. Okay, a leading and an ending diagonal potential here with wave 3 finished. Okay, and wave 4. So we're expecting 1, 2, 3, 4, and 5 around the 64.48 to end that move. Now there is, of course, in the short term a different potential count, because you know this could be assumed as wave 1 for an ending diagonal 2, 3, 4, and 5. Yeah, that will be for wave 3. Do not forget. Then we're going to get 4 and then 5, which means the minuet, excuse me, wave 3 is not wave 5 is not finished yet. Okay, so that's what I'm looking also for the oil. And for natural gas, there we go. Natural gas. The scenario remains somewhat unchanged. We talked about the two scenarios last time. 1 and 2, we'll go for 3, we'll go for 4, and we'll go for 5. Okay. Now, how is this going to play out? Well, one is that this is 1, 2, 3, 4, and 5. It's going to be 1, then 2, then 3, 4, and 5, and it's going to be, it's going to be some sort of multi-structure degree upside move in minor wave 3, or as you can also see here, I've got the Fibonacci's. This could be an ABC. This could be an ABC, and we're going to get 1, 2, 3, 4, and 5, either for a running flat or 1, 2, 3, 4, and 5 for an expanded flat. Obviously, we do not know when to go below that level, right? But still, we can anywhere below 243 is considered to be an expansion. Okay, so these two scenarios are also on my book for the natural gas, which is also the downside supported by the MACD and the RSI. So this will be all for the day, Wednesday. I hope you enjoyed the video, guys. If you like what you see, we appreciate the like button. And if you have, of course, an alternative scenario in mind, do not hesitate to comment, leave your post, and I will get back to you as soon as I can. Thank you for watching, and we will speak again tomorrow.